आवाज Good afternoon, everyone. A warm welcome to all the distinguished speakers and participants in today's webinar, which is based on overview of GST compliance under various sections. Today's webinar is being organized by DGTS Delhi Zonal Unit and Kolkata Zonal Unit. I am Sailendra Kumar, Assistant Director DGTS Delhi Zonal Unit, and I will be the moderator for today's session. At the onset of the webinar, I would like to invite Sri Anish Kumar Gupta sir, who is an Indian Revenue Service Officer of batch 2002 and is currently serving the department as the Additional Director General DGTS, DZU and KZU. Sir has a dynamic personality and a vast experience of serving in various formations in Delhi NCR and Gujarat zone. Sir has also worked in board office and has worked in almost all areas of department, which are excise customs, goods and services tax.
No, sir. Kindly unmute yourself.
Am I audible now?
Yes, sir.
audible. It's audible.
Good afternoon, everybody. First of all, very warm and happy New Year to all of you, to all of the people who have joined. I think this is the first webinar we're organizing this New Year. I welcome all of the delegates who have joined in this webinar on the side of KZU and DGTU. So, as you all know, that we've been organizing webinars last year also on different topics. And the last webinar and before that, it was felt that a lot of topics are being covered and people are being explained the provisions and all. But some basic provisions are it is now time that we need to revisit the provisions and style the basic provisions of GST and all, so that people are aware, rather than some major and some major schemes and all which are issued time to time. Let us focus on fundamentals of GST. So in this series of that type of webinars, last time we had this last month we had this webinar on audit and assessment GST. This time, carrying that forward, we have focusing on the compliance of GST compliance. What are the compliances required in GST? The various sections of that. Our presentations is by Mr. B. Venkateshwaran. As you all know, that people have really liked his presentations, and we have received warm reviews about his knowledge as well as the way he presents topics to the people. So this time again, Mr. B. Venkateshwaran is there, and very beautifully I've gone through this webinar slides myself also, and he has explained the basic provisions of GST for required for compliance as regards registration, tax invoice, return filing. He covered all the issues regarding debit credit notes, e-invoicing and e-way bill also. How to maintain accounts and records. I believe that is also a very important thing people need to know. And Mr. Bimal Jain is here. I can see his smiling face. As he's been a partner in this endeavor, DGTS, and he's the right person, that he understands the importance of compliance in GST, because compliance, because most of the entire bedrock of the GST is on self-assessment. So it's very important that the related compliances are understood by the taxpayer and they comply with that also, so that there is no issues later. Department also doesn't want that different type of issues and different type of problems come out. So last time we had an assessment and audit. Now in audit, a lot of issues come out. So why do they come out? We don't do come.
Sir, unmute yourself.
Yeah, can you hear me?
Yeah. Now we are getting, yes.
So then he's in fact the closing point of that webinar, this webinar today would be the consequences of non-compliance. That also we understand. So very beautifully the different topics have been covered, and I would request people here to understand, assimilate, and bring it into practice. Thank you so much, and wish you happy New Year again. Thank you.
Thank you, sir, for such encouraging words. I am happy to share that today we have with us Sri Vimal Jain, who is a member of Indirect Tax Committee at the Federation of Indian Chambers of Commerce and Industry and the Associated Chambers of Commerce and Industry of India. Sri Vimal has a wide experience in working with various renowned companies and has vast experience in the matters of taxation and indirect tax policy. He has also been associated with various advisory committees on matters related to indirect taxation. Now I invite Sri Vimal Jain for sharing with us his views on today's topic.
At the outset, let me compliment and thank DGTS Delhi Zone led by ADG Sri Amish Kumar Gupta ji, moderator of the day, Sri Salinder Kumar ji, Assistant Director, and Sri Bebek ji, he is also there today, and the London speaker, Mr. B. Venkateswaran, and all the participants. I really pick up the word which is being said by ADG DGTS, that compliances are backbone for the self-assessment. If we undertake compliances correctly, then it is almost 99% self-assessment is being done. It is important for taxpayer and definitely helping department to assess the taxpayer also. Having said that, GST, as we all know, July 1, 2017, is a success story for emerging India. One nation, one tax, one market. Started with 67 lakh registered person with around 90,000 crore per month collection. But now we are 1.4 crore registered person and new normal 1.65 lakh crore rupees per month average collection we are getting from GST. When we look at the today's topic, of course, new year 24, but we must compliment DGTS the kind of initiative they have taken in the past. They are providing handholding and doing a lot.
Already recordation.
Mr. Srikanth, can you mute yourself? Yeah. So DGTS has taken the initiative in the past 3-4 years. We have seen, and when GST got implemented, since then I can say, number of topic and providing handholding and educating taxpayer, even the tax officer, in terms of what is the GST law, how to be read, what is the interpretation and everything. And 24 starting with the topic, of course, it's a basic topic, but very, very important. Overview of GST compliances. Rightly said by ADG today that when we talk about compliances starting from registration, then raising invoice, filing return, all important parameter of compliances we have to undertake, and we have to make sure we are complying with the law. Today, if we look at, there are two important things that from taxpayer, recipient, buyer of goods or services are facing difficulties for availing credit only because supplier is non-compliant. Either they are not filing GSTR1 correctly, or they are wrongly filing GSTR1 or they are not paying taxes. So burden coming on buyer and recipient, their credit is being denied. And for department, there are so many unscrupulous person who has taken the fake registration, raised the fake invoices, did not pay the taxes and pass on the credit, ineligible credit in the supply chain. Challenge for both of us together. But when we look at the GST compliances, I'm going to highlight one important parameter for all of us together, taxpayer and tax department both together. There are certain provisions now being introduced, implemented, and effective. These provisions are helping us that now we will not find any tax evader continuing in our supply chains. And even the buyer or recipient who were denied the credit for supplier being non-compliant will go away. I'm giving you some of the example, leaving my learned key speaker to undertake detailed part of it, but some of the important provision which is helping us in terms of return filing and then simplifying the process of credit availed by the buyer or recipient. Rule 59, sub-rule 6 of CGST rule. We have seen in the past that supplier used to file one, but he was not depositing the tax through GSTR 3B. And credit was denied to the recipient because non-payment by the supplier. Rule 59, sub-rule 6 clearly saying, unless you file your GSTR 3B for the previous tax period, you will not be able to file GSTR 1 for the current tax period. Meaning thereby it is being ensured through a provision that any taxable person in GST has to ensure that he's filing 3B, means making payment of tax. Then only you can file your GSTR 1 for the relevant current tax period. When we look at another provision, 75 subsection 12 explanation, we have seen in the past that supplier used to file GSTR 1 with a higher value, sometime intentional, sometime unintentional. If it is unintentional, no problem. There the provision exists within the GST law to undertake rectification of any omission or error. But those who are habitual offender, they were showing higher value in GSTR 1 and passing on the ineligible credit to the buyer, but not paying the taxes. So difference of GSTR 1 versus GSTR 3B is now termed as self-assessment tax. Rule 88C has been introduced. If this difference exceeds the specified amount, then recovery can be initiated by the department. This is the provision towards the compliances. Now, those supplier who used to do and pass on the credit by filing value in their GSTR 1, they will not be able to do that. So with the compliances of provision, things are getting improvised. Look at section 37. We have seen in the past the supplier may be paying the taxes through 3B, but he was not filing GSTR 1. And thereby, the credit is not getting auto-populated in 2A, 2B for the recipient. Not possible, effective from 1st October 2022. Now, it is to be ensured that the GSTR 1 is to be filed for the previous tax period. Then only we can file GSTR 1 for the current tax period. These provisions are helping us, paving way that we are moving towards that, credit is automated. Supplier getting tax compliant, thereby recipient is getting credit. So 39, if you look at 39, again, important one. Unless you file GSTR 1 for the current tax period, you will not be able to file 3B. So look at these automated provision, of course, made effective from 1st October 2022, but definitely with this provision, things get simplified. Credit is going to be auto-populated for the recipient and buyer, but the condition is supplier need to be tax compliant. He has to ensure he's correctly filing GSTR 1. He has to ensure he's filing correct GSTR 3B and paying the taxes on time. Alongside from 1st October 2023, there's a provision that belated GSTR 1 or GSTR 3B time limit prescribes 3 years now. So those who are not filing GSTR1 for long time period or 3B, for them alarm 3 years time period from the due date that can be filed under section 37 for one, under section 39 for GSTR 3B. I'm giving this food for thought. There are lot many registration provision, e-invoicing provision, time of supply provision, place of supply provision. I'm not going into detailed part of it, but I'm only telling you that with this compliances of rule 59 sub rule 6, 75, 12, 37 and 39 of CGST Act, we will find that the credit which was charging for the buyer or recipient will get smoothened over a period of time. Having said that, 2-3 suggestions from the trade side, that may be policy, suggestion, but I'm just putting forth these 3-4 suggestions. If this can be discussed with the policy wing, and we can see some kind of, easiness for the trade and taxpayer. The first revision in GSTR 3B. Of course, I know there are certain, discussion going on at the policy wing at the GST council level, but taxpayer is looking for some kind of revision options to be given. And recently, notice is being issued to the Honorable Finance Ministry for this pertaining to revision of GSTR 3B. Second, sir, one problem which is coming out that, let's say in a particular tax period, my credit note is much higher than my outward supply. When I'm filling up these numbers in my GSTR 3B, it becomes negative balance, and GSTR 3B does not take negative balance. What to be done? July 1, 2017, as on date, negative balance is not accepted by GSTR 3B. Of course, it is being stated that subsequent tax period I can do, but how long if figure is too high? So this negative balance, how to accommodate? Still, there's no answer to it. Third situation, which is very important, that GSTR 3B is important for the time limit to avail credit. But can I file my GSTR 3B with short payment of taxes? I'm not having, enough finance, enough working capital. GST is on accrual basis. If at all I need to file 3B, I need to make payment of taxes, but I'm not having a sufficient fund to pay the taxes. I'm supposed to pay delayed payment with interest, 18% per annum. So if 3B is being allowed either with the non-payment or short payment, what it is going to help, at least time limit condition under section 16 subsection 4 can be saved for the taxpayer. If 3B is being allowed with the non-payment or short payment. Having said that, last concluding point, because I'm leaving for the keynote learned speaker for the today's session, today's webinar to undertake all the provision, but for the trade, it is very important. See, DGTS, I'm doing lot many, program with DGTS, and I've seen they are undertaking lot many topic for the hand-holding and education for the taxpayer. Ultimate objective is that we have to come forward and we have to make sure that we are tax compliant, we are contributing in nation growth and development. If there's some problem or grievances, of course, we can put our point across. Like today, whatever point came to my mind from the trade side, of course, it is policy related, but if this can go to CBIC and GST Council, of course, it is going to help trade and industry and all the taxpayer. But first of all, we need to be tax compliant. So supplier is now the backbone. He has to ensure the compliances, as I stated, so that the credit in the hands of buyer or recipient is not being denied. Thanks for this opportunity, sir. And from trade side, commitment to you that we will continue to, partnering you for education and handholding to our trade members, and of course, whenever required, to the tax officer as well. And with this, we can always say GST going to be good and simple tax. Thank you very much.
Thank you, Sri Vimal Jain, for your opinion, views, and sharing hands-on experience. Now for presentation, I would like to introduce Sri Venkateswaran, who brings with him 35 years of service experience in Central Revenue Department while holding various positions at various places, and retired as Assistant Commissioner Group A Officer of Indian Revenue Service in January 2018. Welcome, Sri Venkateswaran.
Thank you, sir. Thank you, sir. Hello. Am I audible, sir?
You're audible. You're audible.
Shall I go for the presentation or any speech is there, sir? Shailendra, sir.
You can start.
Yes, thank you very much, sir. Thank you very much. So, very good evening to everybody. The ADG Delhi and Kolkata zone and officers of DGTPS and distinguished speaker, Mr. Bimal Jain, sir. Definitely, I have noted down so many information he has given. Definitely, he is entertaining as well as a vast experience in the GST. And definitely everybody love to know what is his views are. Really, I'm very happy that I'm joining third time with Vimalji. Really, I'm given an opportunity and fortunate to host these particular presentations. Thank you very much, sir. I have taken down all these notes, whatever you've given regarding Rule 59, Rule 7, Section 75, all these things. Definitely, I don't know whether I'm going to cover all these things, sir. You know very well. The tax company is one of the biggest subject, though it is a hectic and cumbersome. So the law expects that you have to do some of the things definitely so that it is easier for the trade and industry as well as for the department also, so that the revenue which is required for the public funding is very much without any loss will accrue to the government. And also at the time the ease of doing business will be easier for the taxpayer. With that introduction, let me go to the PowerPoint session. Actually, it is a slightly lengthy, but somehow I have reduced because we want to say only overview. So wherever required, I have given the latest amendments. I am not going to the basics because the session is also not required for the basics. And however, I will take the liberty to get information because it is definitely this learning experience for not only for the taxpayer and as well as the even trainers. Because today when I asked my friends whether they can give some point for this particular session, I think I received downloads of information because that was the very much really happy that more people want to know tax compliance. Now, yes, said it is after 6 years, we are having a moving forward to the GST, and there are definitely the taxpayer is being protected. That is what the members are told. The taxpayer, the money he has paid to the exchequer has properly go to the exchequer, and wherever the credit, it has to come to the rightly to the person who has paid the tax. So it should not go to the unclosed plus beneficiary. That was the reason for the fine tuning, or you can say it is a tightening some of the input credit mechanism and return filing mechanism, all these things. Let me share my PowerPoint presentation right now, sir. Hello. Is it visible?
Yes, sir.
Yes.
Visible. Visible.
Okay, thank you very much, sir. So today's session is overview of GST compliance under various sections, but we are going to take very minimum. We are not going for the entire GST Act and these things. Before that, I wanted to say our DTPS is doing a wonderful job in hand-holding the taxpayer as well as the tax officials. Definitely, they are doing a very good job. And now, the CBIC has also introduced a WhatsApp channel. So please subscribe for this WhatsApp channel and follow it. So you will be getting the latest update immediately in your mobile phone. That is one of the reasons I also checked. It was definitely whatever the updation available till yesterday we received. So my request for each and everybody is please follow CBIC India channel in WhatsApp. I have given the link. You can once we the PowerPoint, this session is over, you will be sharing the PowerPoint. You can give a link from this so that you can also subscribe for the CBIC PowerPoint. That is a WhatsApp channel. So as usual, we are having a disclaimer only for the purpose of this. It is only for education purpose, not we are going to analyze the legal provisions or interpretation. It is only for easy understanding for the beginners, or we can say some of the persons who wanted to learn and move forward in implementing the GST requirement compliance. That is the reason. So we have used very simple languages also. I am not using very this thing, and the interpretation is also not heavy. It is going to be very, very simple interpretation of legal provisions. But however, for the readers, we are given wherever required all the legal provisions to read more on account of the each and every provision required. So this is the first we have to understand In my experience for 38 years and after the retirement, I have seen many of even the corporate, the higher levels are unable to understand some of or comprehend the law. So ignorance of law is never an excuse. That is said wherever it is, definitely whether it is a taxation law or it is another civil and semi. So as a taxpayer, it is his duty to educate himself on the all tax obligation that needs to be fulfilled. And also it is a lookout of that is the responsibility of the organization to educate their subordinate to understand legal provisions required for the better compliance. So once you do the better compliance, then you will be avoid unnecessary litigation which is unnecessarily coming to them, so that you can save your energy, save your money on account of unwanted litigations because of your not knowing legal provisions correctly or you misunderstood some of the legal provisions. So ignorance of law is never an excuse, and definitely you should be aware some legal provisions. I hope many of the people will be understand. They will be also already know what is required under the GST Act and rules. So the topic for the day, I will take you the journey, a very minimal journey, not a very big journey for this. There are definitely, very well, our taxation law is very complex. It has too many provisions and it has been sub rules and it has also subsections and the provisions, explanations. But for a GST journey, what you have to understand is understanding the tax liability. Nothing but we have to know what is a taxable event for the goods and tax, service tax. Once you understand the taxability of the goods, then definitely your compliance mechanism starts from there. The first compliance mechanism on account of after the understanding your tax liability is nothing but your registration. Then after registration, what you are going to do, you are going to commence your supply of goods and services or both, so that what you have to know, how I have to affect my supply of goods and services to the recipient, whom I have, my clients or my customers. That is the next. There we have some of the important provisions which is governing how I have to affect. We are going to touch upon in subsequent slides. Then having supplied the goods, there are some responsibility on account of me for my inward supply, which means my purchases and sales. And also being a self-assessment, I have to keep some of the documents ready when the document department wanted to verify whether my compliance with reference to self-assessment is correct or not. So there are certain requirements that is called documents related to the supply of goods and maintaining accounts for outward and inward supplies. Whether it is a manufacturer or trader, these documents are essential and these compliance is a must. Then availing input tax credit. So you know very well the GST scenario, the output tax liability, input tax, there is a cascading effect on account of the input has been reduced to a large extent. So earlier we started with our performance credit during the centralized regime. Then we also moved to MODVAT. From SENVAT, we moved to MODVAT, then we moved to SENVAT, and we introduced the service taxes also. Now it is across each and every supply chain you are entitled for the refund of your ITC credit. Now it is a big quantum leap in the avoiding the cascading effect. Then finally, having done my sales and everything and supply, now I am reporting to the department. This is my self-assessment. Kindly accept my self-assessment. You can verify whether I correctly self-assessed and paid the tax or not. So you are reporting your self-assessment by way of submitting your various returns prescribed on the rules made under, and we will see some of the rules. Already Bimals are told which are the rules, which is sections which is more important in reporting the self-assessment. That is one. Then we have to understand, assuming I am not following the compliances, what should be the consequence? So definitely there are penal provisions and also the harsh provisions. We can say it is a prosecution arrest. That is also possible. Then some of the points to ponder, we can say how best I can, with a checklist I can have, whether I can properly handling my tax compliances with reference to GST. And a small question and answer session also moderated by the Assistant Commissioner DGTS, Delhi. So this is our journey today. Then, so important compliances when you say for the GST, and I said we said that today's is an overview of the important sections for the compliances. So I have given very few. We are not going to take much on account of each and every compliances. So the registration, we are having a very important compliances. Once you understand your tax liability, then comes your registration. For that, we are having a section 22 to 30 read with rules 8 to 26. After that, for the supply of the goods, there is a document is necessary. There are 4 types of documents as prescribed. And we can say it is an invoice, debit note and credit note. And one more document is called your delivery challan, where there is a requirement of movement other than taxability. There we are having the delivery challans. Now, having said that, the department is now standardizing the invoicing pattern. For that, we have started using the e-invoicing, which means nothing but reporting your sales data, that is your supply data. At present, it is a B2B and export data to the governmental portal. Then you are intimating, reducing your tax compliance or tax reporting to the barest minimum. And next, for the movement of goods, there is one more requirement is called your e-way bill provisions that covered in the section 68 of GST Act, read with rules 138, 138. That means how to check, how to prepare, which are the documents, which are the exempted categories. So these 3, we say the basic requirements for your self-assessment, or we can say the supply of goods and services, it is covered. Then your accounts and records, that is section 35 to 36 of GST Act, ready with the rules 56 to 58. So I said earlier that is input tax credit is a biggest issue. So that we are having section 16 to 21 and we are having corresponding rules 36 to 45. And we said GST, one of the major issues in GST is the, we can say the scam or fake invoices, which is available in the market to avoid the input tax credit, so that defeat the very purpose of the cascading. So there we are having a more stringent provisions are of late coming. So that is called our input tax credit. There we are having a restriction on availment, and we are having a restriction on availment of common inputs rule 42 and 43. Then after that, we are going to say the returns and payments for indicating our how I have done our self-assessment on account of outward supply and my requirement to the report the annual returns to reconcile my financial records with the GST records. And some I have taken as a export and related procedures. I am not going for very much. You can say export, there are minimum procedures is required. Then consequence for the non-appliances, we can say section 47, 122, 128. These are nothing but your penal provisions, whichever wherever there is required. And also there is one more provision is your litigations, which is coming under section 73 and 74. When you are not complying with the provisions, there is a loss of revenue or escape of assessment from your payment of GST. So these are the important compliances required. So goods and GST is nothing but goods and simple taxes. So it has evolved for the past 6 years. And you know very well, recently the GST Council has completed its 52nd council meeting, and we can expect some more meeting in the days to come, either it may be pre-election or after election. So we have to say this, GST Council is playing a very vital role in formulating the policies and also in the rate structures and also procedural requirement for the ease of doing Indian indirect taxation system. So it is a good, simple tax we can call, even though right now some people are of the opinion it is definitely slightly not as simple, it is really complicated. But unfortunately, now we are having a taxation for the entire country, one tax, one nation. Is with a big country like ours, there will be bound to happen some of the hiccups. So there we have to, the department has to plug the loopholes to avoid unnecessary revenue leakages and also protect the interest of the stakeholders as far as the taxpayer. So this is the reason. And also what is compliance? So compliance, definitely each and every organization is having a some set of rules which has to be adhered, whether it is at the time of HR rules or it is a marketing rule or collection. So each and every organization definitely has certain predefined rules and procedures and protocols which is necessary for the smooth functioning of the organization. So compliance are the backbone of any statutes. So GST is no different. So definitely GST has so many compliances. What is GST compliance? The GST compliance is nothing but adhering to the rules and regulations and acts of the GST system. That's all. So adhering to the GST is making the regulation which is pivotal for the unwanted penalties and sustaining seamless operation. So to avoid all these things, we should have adhere to the GST compliances. The comprehensive and implementing various provisions also require e-invoicing, e-way bill, everything has been also very much required for the smooth sailing of your tax payments. There are separate GST rules applying for the goods and service depending upon the nature also. So today I have taken only for the regular taxpayers. If you consider this GST, we are having a different type of taxpayers. One is called the large number of taxpayers under GST is regular taxpayers. And a smaller number we are having somebody is called the composition dealers, and we are having a e-commerce operators, and we are having a government TDS collectors. So there are different type of organizations are available, and in this organization size also we are having a MSME sector to large sector. So each and every sector having a different set of protocol to comply with the GST provisions. By and large is digital. We have to definitely thankfully say the GST compliance are now digital, and it is a more 90% paperless. Definitely the person who is sitting in Andaman or a person sitting in the remote corner of any part of India is having your internet connection is sufficient for him to comply with the provisions of GST. As a person, I implementing the GST backbone that is digital. I also visited some of the remote parts in Andhra Pradesh and Andaman also. There we found we have tested that we are already ready with the digital and paperless office for the GST implementation as early as 2007. Now the wings has been spread, and recently what is added advantage for the taxpayer is payment through credit card. So there is a latest addition for the taxpayer to ease his financial working capital requirements. Now the GST also introduced the payments can be made through your that is your credit card. That is the latest requirements. So now our primary categories we are going to focus is registration compliances, tax invoice compliances, return filing. Many more compliances are required, but we are not going to touch because the time constraint. Otherwise, it is not going to be a simple exercise. It is going to be a exercise for the entire year. So I am going to enable you or kindle you to how to go about the compliances which is required for the broader categories. Then, before complying provisions, I should understand whether I am going to comply with the provisions of GST or not. So any taxation has certainly a particular word called a taxable event. So the taxable event determines whether you are coming into the tax net of that particular legal provisions. For example, if you are paying income tax, the taxable event is earning income. So once you earn the income, then the provisions will be made applicable for the complying the provisions with reference to the particular act or rules or law. Similarly, in the case of GST, what is required is we have to understand the main aspect is the supply, that is the scope of supply. So what is the scope of supply? So here it says any supply interstate or intrastate is considered, that is defined under section 7. I am not going to teach each and everything about the supply definition and schedule number 1, 2, 3. All these things are very much understood. So if you understand section 7, ready with schedule number 1, schedule number 2, schedule number 3. Schedule number 1 is even though there is no consideration issued, certain things are considered to be the supply. Then schedule 2 says wherever even whether there is a doubt whether this particular supply scope is supply of service or supply of goods. So there they define schedule 2. And the third schedule is which are not supply as per the provisions of the GST Act, which are at present outside the purview of GST. We can very well say it is a non-GST. So if you are falling under the scope of schedule 1 and schedule 2, or in general in other categories, your liability starts, which means your complying provision has to start with. So this is the first point. So the factors which are determining the tax liability under GST in order to enable you to comply the various other provisions, or these are the factors. Then you have to first understand whether your supply, whether your activity amounts to supply in relation to a business and in the furtherance of business, and there is a consideration. These are the some technical terms used or phrases used in the section 7 of the GST Act. Yes, if you find the definition is suitable, then you have to find out whether the supply I am doing is service, goods or not, and what is my nomenclature for the goods or services. Otherwise, we can say classification. So that determines what should be my rate of tax, whether I am payable or not payable, exempted. So that is required for your classification. You know very well the GST tax is ad valorem basis. So we have to understand what is the value on which I have to pay the tax. That comes to your section 15. Then it is called the value of supply. then you know very well the GST is subsumed local taxes, and also it is called the cross-border tax or the interstate supplies also. And we also understand that the GST is a destination based. So there we require a place of supply. What is the place of supply? Whether it is an interstate or intrastate or export or import. So there we have to understand the place of supply to determine the correct liability. If all these things are there, I know I am not exempted, I am not these things, I am liable to pay tax. So once I come to the point, the journey of tax liability, yes, there is no way out, I am liable. Either I am going to liable or I am going for a voluntary payments also. That both are possible. So once you understand the liability, then comes your next compliances. So next compliances, what happened? Once you understand supply, it does not say you have to pay. There are possibilities in section 9. It says who is liable to pay. Either it is a buyer or seller or another person. So the GST is evolved created in such a way, in certain cases the buyer has to pay, that is supplier has to pay the tax. That we call as a forward charge mechanism. It is comes under section 9(3), 9 main section. So if a supplier pays is my liability, then the supplier has to make payments to the government, collect the amount from the buyer, that is seller buyer, the other recipient, and pay it to the government. So that is called a forward mechanism. So in the forward mechanism, yes, I am liable to pay forward mechanism. My legal compliance requires me to do the forward charge mechanism. My legal consequence for this is separately available. Next is called reverse charge. So in order to have uniformity, to avoid tax evasion, to bring large number of taxpayers under net and revenue consideration for the exchequer. So there are at times possible. So at times the department decided instead of collecting forward mechanism, they can also collect the tax by the reverse charge mechanism. So this is not a old, this we are having a earlier in the service tax regime we got, in sales tax we got a purchase tax, in income tax we are called as a TDS provisions. There the original person is not paying the tax, but rather than the person using the services are receiving the, hello, he is liable to pay the taxes, and in that scenario, as per the provisions, that person is liable to comply with the provisions as if he is the supplier of the goods and services. That is called your reverse charge mechanism. Next. Hello. Please mute your phone, sir. Mute your these things. There is some disturbance. Hello. In there, another thing is called e-commerce operator. You know very well. Now the digital platform is growing in phenomenal growth. Definitely, we say it is a phenomenal growth. Hello. Moderator, please mute others also, sir, because so many disturbances coming. So we are having an e-commerce operator. Right now we are having that comes under section 5, that the government may notify goods and services on which the tax is liable to be paid by the e-commerce operator. Either it may be your Oyo, Swiggy, Zomato, Uber, Ola, and there are many aggregators and also e-commerce operators. So as of now, the section 9 indicates who is liable to pay and who is liable to comply with the provisions of GST Act. So now we understood there are 3 types of persons. One is a person who is having the forward charge mechanism. Another is a person who is having the reverse charge mechanism. And another is called a person called the e-commerce operators. Okay, fine. Now I have understood my liability, and definitely I have to comply with the provisions of GST Act, or I have to enter into the GST ecosystem. So once how to enter the GST ecosystem? The first is my registration. The registration for the GST is the mandatory wherever it is required, and we are also going to see which are the person mandatory, which are the person not mandatory. And I am not going for each and every compliance is required, but we are going to take very minimum. The section 22 to 30 of GST Act, read with the rule 8 to 26, speaks about the what is required for a person to get a registration in GST Act. So here once GST liability is determined as applicable to the first schedule, the registration is the first work. So the under law, a supplier is required to obtain registration number subject to certain conditions in every state from where he makes taxable supply of goods or services. You know very well the GST scenario, one tax, one nation, and we are also given one PAN base. The GST is a PAN based across all the India. The very same number will be used, but depending upon this, each and every state you should have a separate registration. But within a state, you can have a umpteen numbers of additional premises with single, or if you want to have a multiple, you can have a verticals, you can use it. So all the law provides for the various conditions, circumstances, and supplier of goods. All these things are required. These are. So the supplier is required to obtain registration if the aggregate supply is a more than 10 lakhs. There is some special categories. In some categories it is 20 lakhs. In some other categories it is 20 lakhs. And the section 2, subsection 6 says what is aggregate turnover. The aggregate turnover is all taxable supplies, excluding inward supplies, that is RCM supplies, and it includes exempt supplies. Even though if I am having a taxable supply along with exempted supply, even though I may have more exempted supply but less, but if it is a increase more than the threshold limit, definitely I am liable for registration. And similarly, all exports also included in the taxable supply value. Then service interstate supplies, all these are non-GST, but this is determined based on the PAN number of a all India basis. So if your all India basis in one state you are crossed 1 crore, in other state you have just started, you are moving for only 4 lakhs. Does it mean I cannot take a registration in the particular state where my is only merely 4 to 5 lakhs? No, sir. So since your all India turnover in other state has exceeded the threshold limit, you are expected to comply with the provisions of registration in the other state where your turnover is well below the threshold limit. Your threshold limit is your aggregate turnover on a single base across computed all the states in India. Then mandatory registration. So the mandatory registration is definitely there are certain persons who are providing interstate supply. So interstate be done of goods without a registration. Definitely, if I am want to trade between Tamil Nadu and some other state or Delhi or nearby states, if I am supplying to go as a goods, it does not say about the services. The services, there are some exemption has been given, but in the case of goods, it is a mandatory. If at all, I want to do either interstate supply. So interstate supply, you know very well, export also considered as a interstate supply. And supply to SEZ also considered as an interstate supply. Suppose you are catering to the needs of neighboring state or SEZ, or you are going to be exclusively an exporter of goods, please know that you are definitely required to take a registration. The next person is a casual taxpayers. These are nothing but when you want to go having a permanent in one state, but you want temporarily trade in some other state on account of trade and exhibitions. In that scenario, you can apply a definitely casual trader you have to apply. Then persons chargeable to RCM. Though you are not having any tax liability, but unfortunately, as said as per the provisions of section 9(3), you are liable on account of the receipt of certain goods notified or specified the services. You are liable to pay tax as if you are the person liable for that person is a supplier. Whatever the supplier is having the provisions, you are also expected to follow the same. In that scenario, it is a mandatory you have to take registration. Then input service distributor, and we can say government agencies, they have to take registration as a TCS, TDS producing, and e-commerce operator has to provide as a get a registration as a TCS. So then OIDR, those who are providing services across to the non-governmental or non-taxable persons here in India, then they are liable to take a registration ODIR. It is nothing but we are having online gamings and online downloading of data. Other than the government, there is a business organization. Business organizations are going to pay tax reverse charge. And in the other than business organizations and not taxable person like individuals, you are going to download certain things. Then ODR will come into attack. The person who is providing that permission to download or facilities is liable to pay the taxes in India, and has to follow the procedures set out against for him, and he definitely has to take a registration. So I'm not going, I said I'm not going for the very many details which required, what is the form required, what is the photograph required, what is. Now some of the very important compliance requirement is the furnishing of bank account and Aadhaar authentication. And now we are also started geo-tagging. So now it is slowly we are going to make geo-tagging is a compulsory. Now already we are having a geo-tagging has been started in the pilot, and GST and also providing you, please geo-tag your location, principal place of location as well as additional premises of location based on the maps provided in the registration application itself. Apart from that, there is a very two important provisions which is definitely required is a furnishing of bank account details and Aadhaar authentication. So furnishing of bank account requires, in order to understand how you are paying, how you are going to benefit from the department. Any benefit that is like your refund if you want, then definitely there is a need for bank account. When you want to make payment, definitely there is a need for your bank account. So now the bank account is made mandatory. So within 45 days of your registration, you have to definitely upload the details of your bank account or the furnishing of first return required under section 39, whichever is earlier. If you are not filing or not updating your bank account, you may not be able to file your returns. The bank account is very much required. The bank account, some of the validations are now made available by the PMFS software. The bank account should be in the name of the organization. The bank account should be linked with the PAN number. The bank account who is authorized person is available. If it is a property everything, it should be also Aadhaar link. So these are the very much required for the compliance with reference to the furnishing of the bank details. Another important is section rule B, Aadhaar authentication of the registered person. So if you do not want unnecessary these things, compliance issues, you are mandatorily required to Aadhaar authentication. Now, who are the persons? In the case of property concern, the proprietor should be Aadhaar authenticated. If you open up your this, I find in my experience for the past 2 to 3 years, even after the amendment of the rule 10B, still many people have not made Aadhaar authentication. So Aadhaar authentication is very much vital for the following reasons. One, assuming sometimes your RC is cancelled for the reason some violation you have done, but still you want to make a revocation application and everything. If you are not done your Aadhaar authentication, please note you cannot get any revocation or cancellation. So that is a very much required. So definitely for your revocation of the suspended or cancelled registration, your Aadhaar authentication is a definite, without which definitely you cannot again commence your business. That is more important. Second, more important, I find in many of the cases I am receiving complaints, or we can see grievances from my clients and across the many places. They say I am not getting my refund. When I ask them what is the reason, they are unable to say, I do not know, sir, I am not getting a refund for the 1 year or this. When I log in, then I find these people have not done any Aadhaar authentication. From 1/1/2022 onwards, the department made it very clear, if you are not authenticating your Aadhaar authentication, then definitely your information about the export will not send to IceGate. So which means if you are sent you to any goods on account of on payment of IGST, definitely the information is not shared with IceGate for the sanction of refund. I find many people till today, they are not made this and come to me, sir, I will not get. When analyzed, we find Aadhaar authentication is not done. So Aadhaar authentication times is easier done, but at times you will have a very many errors in the name mismatch. Then name is different from the Aadhaar and name is different in PAN. So there will be some complications are happening when you are finding Aadhaar authentication if you are not done it earlier also. At times we find the Aadhaar authentication takes at least 45 days to 3 months. So better immediately if you go back to your this thing, if you find any pop-up window which shows there's Aadhaar authentication is pending, please otherwise go to the profile page, check up your Aadhaar authentication status. If it is not successful, please immediately make your Aadhaar authentication success. And similarly, if you are an exporter or you want to get a refund on account of very many reasons, even for example, you have won a case on account of your appeal, fine, you are going to file a refund claim. You have won the case, but unfortunately, you cannot file your refund application. So there are all refund application under section 89. You are definitely require an Aadhaar authentication. So without Aadhaar authentication, definitely all your requirement for your benefits on account accrued on account of refund is going to be totally stopped. So that will be definitely affect your business, and that will affect your working capital required for your day to day. So my request for the all persons, please immediately go back to your these things, open up your GSTN portal, check your profile, do two things. One, verify whether Aadhaar authentication is success. Second, verify your bank account has been properly authenticated by the PMFS. If both are fine, then you are safe and your benefits will definitely come unhindered. Otherwise, you will find pillar to post to resolve all these issues. Fine, I have taken a registration. Now I have to go for a supplying my goods or services or both. So that what is the minimum required document under which I can supply the goods? Okay, I can hand it over the goods. Fine. Then what about my legal requirement for that? When you supply goods, it has to supply along with the taxable invoice, or it is a bill of supply, or debit note or credit note. So these are the very minimum documents which is required to inform your transaction. That's a tax transaction. We are having invoice, debit notes and credit notes. So these are elaborately discussed in section 31 to 34 of GST Act, read with rule 46 to 55. So invoice. So invoice compliance, this is a very must. This is the basic document for the GST compliance. For that matter, for all the indirect taxation matters, we can see. So here, the invoice is the very much required minimum document. This is a document, we can call it as a self-assessed document. What is your self-assessed document for the purpose of tax liability? It is not your return, but it is your invoice. Because based on invoice, you are providing all this information. You are consolidating all this information in your GSTR1 return. For example, take invoice. What are the information you are going to give? You provide your GST number, other persons and address and GST number if you want to avail ITC credit, and you will give what is the name of the goods and what is the HSN code for the goods, what is the rate of tax for the goods, what is the value for the goods, and finally you can assess whether I will pay GST or state GST or union GST or IGST. So this is the very minimum document, or we can say it is a very vital document for your assessment. So this invoice gives the most important document in the tax compliance. I find many times the invoices are not properly issued without containing the very relevant information required. Sometimes they will say bill to ship to model, but the model, you will be mentioning everything, but you will omit to mention where the goods has to be supplied. You will say, sir, I raised invoices. Then you raise invoices, sometimes you all fail to inform the HSN code number also. And at times we are also find serial number. Then serial number of the invoice is very much required. So as per GST portal, it should be a 16 consecutive number. It is a 16 digit. It will not allow you more than 16 digit. Unfortunately, I find many times they are issuing this invoice with more than 20 characters. So restrict your characters for the invoice number. It is a sequential number. You can use unique number for anything. For export, you can put EXP. For domestic, you can put domestic. And for credit and debit notes, you can put whatever the easily understandable terms you are using. But it should be unique and it is a sequential. And you can also use a computer-based invoices also possible. But the very minimum requirement, these are the basic requirement. You mention your GST number, other person's GST number. Then if you are going to send the goods other than the person who is asking that, you are supplying it, delivering it a different place, or you are also, your godown is different, your main office is different. All these informations are mandatorily provided. If not provided, Definitely you are going to face yourself as well as your recipient is going to face the problem. If you are facing problem, okay, fine, leave it. But unfortunately, a person who is receiving their goods, he is also going to face a hell of a lot of problem. So better understand what is the invoice compliance required. So these things you can say invoice, tax invoice means a tax invoice referred to section 31. This section mandates issue of bill of supply for every supply or goods or both. A person can supplying goods is issue. Type of invoice depends upon the category of registered person making supply. If a registered person is making supply, it is invoice. If it is an exempted person, we can call it as a bill of supply. And tax invoice section, we have to say different type of tax invoice told. Then time of supply for the invoice, it's a very vital. For the goods, where supply involves movement of the goods, invoice to be issued before or at the time of removal. So definitely you have to prepare your invoices before commencing your movement for the goods. In case other than goods, invoice can be issued before or at the time of delivery of the goods. That is also possible. In the case of supply of services, 30 days from the date of supply of services, within 45 days from the date of supply of service in the case of insurance and bank companies. For continuous supply, it is each and every event we can call. For continuous supply of services, then also each and every completion provisions, then you have to issue invoices. These are the time requirement for the issuance of the invoices. Then, please understand in the GST scenario, the credit note, debit note is from the supplier point of view. Many times the queries come to us, sir, I received a goods, I am going to send it as a sales return or purchase return. So purchase return, is it necessary to upload any data? Absolutely no. So sales return, we have to definitely make a credit note. For purchases, you are not expected to make any debit notes, but you will debit note you will make and intimate to your buyer, I am not accepting your value, please issue a credit note and upload it to the GST portal as the case may be you require. Whether it may be a commercial credit note or it is a non-commercial credit note. If it's a commercial credit note, you are not expected to upload, but if it is a normal credit note where you want to reduce your tax liability, definitely you have to upload your credit notes. So please understand there is a mechanism in GST. Also now it is made mandatory from last year onwards. Whatever the credit note you have uploaded should properly reported in your GSTR 9 also. If the credit notes applied is more and your credit note in this applied as per the books of accounts is less, what it says? Definitely you have collected more tax than what is expected. So that is very important. So that you have to understand. So the credit card note can be issued certain occasions. You cannot go on the whims and fancies. You cannot go on issuing credit notes. Such should be a valid reason. You please expect the department will ask more questions why you are issuing a credit note. Whether the credit note is on account of sales return or account of reduction or account of the discount passed it on. All these things are required. And you can issue credit note anytime based on your reply. Earlier it was a one-to-one correlation was there. After 2019, this one-to-one correlation has been done away with. Similarly is the debit note. Debit note is required for what purpose? When you want to require an additional amount to your supplier on account of the price revision or some other expense incurred that has been approved by him. Sorry, sir. In that scenario, you are definitely expect this is a debit note, and the debit note you have to upload. Otherwise, what will happen? The debit note will be in the account in the books of accounts, but if it is found by the department, you are liable to pay for the additional amount on account of the amount collected based on the debit note. So the credit notes and debit notes are very much required. And please understand there is a provision section 16.4. It clearly categorically says when the debit notes can be issued. Whether the debit note is a base year or it is a valid from the year it is issued. It is as per the clarifications. It is based on the issue of the credit debit note and not issue based on the original invoice based on which the debit note is issued. That is a major tax recurrence. Then comes delivery. Okay, there are occasions you will be need the goods has to be moved. but it is not a supply, it is other than supply. So that there are delivery channels required as per the provisions, and they say liquid gases, transportation of goods for the job work. Here it is not a supply, it is only a sending the goods for job work and receiving it. So that the transportation of goods, job work, definitely a delivery channel is required. Please understand one more thing. For the e-bill provisions, these documents are mandatory. If these documents are not available, which are not accompanying the goods, please take a note, your goods are liable for detention, and unfortunately you have to force to pay 200% the tax as the penalty to get the goods released. So here, that's why we are very much saying, for the movement of goods, it is very much required. The proper documentation is very much required. So here delivery channel is required, transport of goods for job work, transport of goods for the reasons other than by way of supply, or such other supplies as may be notified by the CBIC or board. Then very frequently we are asking what is the question about CKD, SKD. So there also the department has already clarified where the goods are transported in semi-knocked down or completely knocked down or in batches or lots. So there you have to issue an invoice first. When we find they are not issuing the invoices and goods are moved and in transit, when it is said goods are detained, these people are coming crying, sir, my goods are detained, I have not issued, I am under the impression I have to issue invoice only after the completion of everything. That is not the case. When you are sending the goods in lots or CKD or SKD condition, first you have to prepare an invoice. Then based on the invoices, you determine number of lots required for the movements. For each and every lot, you have to prepare a delivery challan. And for each and every delivery challan, you have to send an original copy of the invoice. And based on this delivery challan, you have to prepare an e-way bill. And the final copy at the time of last lot, you can send the original copy along with the DC. So this is very much required because many times we find engineering goods which are sent on lots or very, very big consignments, we can say plants and everything is going out. There we find there are issues are coming on account of the not properly understanding how to send CKD and SKD and lot movement. It is not multi-vehicle because please understand multi-model is different and the movement of CKD and SKD is different. Many people misunderstood. Multiple vehicle transportation is not CKD, SKD. Multiple vehicle is required for the transferring from goods from one transportation to another transportation, either in the same category or different category, by road to rail and after that road. Where this is a requirement, not it is a CKD and SKD conditions. Then now we told we are evolved. So e-invoice is made mandatory. Earlier we started with 500 crores and above. Now from August 2023, even for the turnover of 5 crores, e-invoice is a mandatory. What is the requirement? If your turnover for any preceding financial year from 2017 onwards, if the turnover is more than the threshold turnover of 5 crores, in that particular year you are liable to, the next year you are liable to make e-invoice mandatorily. If my turnover is 5 crore this month, am I going to be last year I have not started my business, my turnover was less than 4 crores, this year it is 5 crores. When I am going to use the e-invoice, I have to make e-invoice compulsorily from next financial year. So legal provisions, section 31, rule 48.4, rule 48.5. So here it is, in the road check, if you are a class of person and you are not raised any e-invoice, then your legal vehicle is liable to be detained along with the consignment. So that is very much important for the class of buyers. What is a basic document for the moment? It is nothing but your e-invoice and your e-way bill based on the limitation. But in the e-invoice, even if it is a 1 rupee to B2B supply, you have to raise an invoice, e-invoice. But in the case of e-way bill, it depends upon intrastate or intrastate. It is a 50,000 interstate. It is a 1 lakh intrastate. It depends upon the state to state also. So, however, e-invoice has to be issued even for the 10 rupees, 20 rupees, definitely not based on the e-way bill thresholds. Certain persons are exempted. These people are not required to file. Insurance company, GTA, passenger transportations are the important person where there is a number of invoices generated per day or per month is a huge. That's why they have not implemented for e-invoicing and also SEZ units. So transaction, which are the transaction I have to generate e-invoice? Supply of registered person, B2B. If another person is a getter registered, many times we also find the person is registered for some other person and he want to receive the goods, maybe for personal consumption or maybe for some other purpose. But when we check the GST number, we find that person is a B2B transaction. That is a holder of B2B. It says a registered person. Please understand, it does not mean a B2B transaction. It is a registered person. So for any registered person, if he is registered, then definitely your requirement for e-invoice is a mandatory. Then second, export of goods and service with or without payment. Supply to user definitely required. Deemed export, you know very well, on account of the EPGC scheme, or supply to EOU, or supply to the advance authorization. All these things definitely e-invoices exempted only B2C. And now the supplies to government also comes under the e-invoice. So the government contracted, if you are sending goods to any government organization which is required to file TDS for on account of your purchases, definitely you are expected to issue e-invoice. So please note, you cannot under whims and fancies cancel or amend e-invoice. So e-invoice, if you have done, it has to be done within 24 hours. So please make sure the invoice is made. Definitely it is required. Otherwise, don't enter any data and later find it is very difficult to cancel. If you know thoroughly, yes, today I am requiring the invoices, there is a dispatch is that I am going to prepare, please prepare. Otherwise, no sir, vehicle is ready, it may be coming or may not be coming. So don't have any ifs and buts. If you have any ifs and buts for the movement of your requirements, then please don't raise any e-invoice. Then it is very difficult for you to cancel or amend. So there it is a difficulty is there, practical difficulty. Kindly consider, inform your other employees also what is the method for the e-invoice. I am not panicking, making you to panicking, but it is a real issue which is faced by the industry today. So e-invoice is now made mandatory for the movement of goods, made mandatory to avail your definitely input tax credit. So these are the very much basic requirements for the e-invoice. Consequence of non-compliance of the invoicing. If it is says, then definitely you are penalized, which means I told earlier, there is a possibility that you can, goods are detained. Then input tax credit also, you may not be possible for the other person. And there is a penal consequence of section 125 also 48.5, which mandates either 10,000 rupees or 100% of the tax due, whichever is higher. So here one should understand the consequence of non-compliance of e-invoicing also. Then goods. In the case of movement of goods, if it is a threshold limit is something more than 50,000 or 10,000 by 1 lakh rupee, e-way bill is mandatory. You will be aware there are umpteen numbers of cases are now pending before high courts, honorable high courts on account of the goods detained for the very many reasons. Expired e-way bill to ship model not properly mentioned. Then you can say it is a bill, other side you can say additional premises not properly mentioned. Then there is a variation between the goods and these things. So there are definitely 1,000 reasons your transportation has been withheld on account of incorrect information given in the e-invoice or invoice or e-way bill. So you should be sufficient, you should be understand the importance of the e-way bill. So we said the causing the movement. Please understand the registered person causing the movement. Please understand, if you are not doing that, recently the audit has found and the scrutiny has found, and also your blockchain technology which recently developed by IIT Hyderabad, for which is shared by other formations, found the variation in e-way bill requirement for the inward and outward supply is enormous, alarming ratio. That's why umpteen numbers of so-called notices or explanation being called for from the trade and industry. why the tax liability should not be determined or ITC should not be disallowed because of the non-complying with the provisions of e-way bill for the inward and outward supply. Here also please note, when you are sure about the transportation, then make the invoice and e-way bill. Otherwise,
very good.
better you can keep it mum for the not to prepare any e-way bill till your
Attachment level, security risk.
and also please inform your transporter. Any problem faced in between in transporting, immediately intimate to you to extend the validity. If the validity is not extended, or if the vehicles are not properly updated in Part B, there is every possibility that your goods may be detained. So this compliance is a very much required for the movement of goods based on the e-way bills. Personal liable told, there are person, the buyer, the supplier, or the recipient, or the e-commerce operator, or the transporter, whoever causes the movement of the goods is liable to prepare the e-way bill. E-way bill compliance verification, there is under section 138B, the proper officer is to verify the e-way bill in transit. If the e-way bill is not properly there, then he has every right to detain the goods under section 129 and impose a penalty equivalent to the tax involved, subject to other conditions. And the recent advisory by the e-way bill systems are, now it is a mandatory to include HSN code number. The HSN code number has to be notified under section 78 of 2020. How many digits has to be made by the every taxpayer? So there is a given 6 digits or 8 digits or 4 digits. So this validation will be 2014-24. If you are not making or incorrect then your e-way bill will not be getting generated. So that validation has been introduced. So please make note of that, modify your system accordingly, or otherwise you can also know very well, you can download and verify which is the correct HSN code number for your 4 digits, 6 digits and 8 digits, which is required for the domestic and also export that. Understand this particular requirement of the advisory for the HSN code number. Another e-way bill requirement, it is going to be implemented from March 2024 is, the department found that many people are though raising the e-invoices, they are not properly mentioning the e-invoices and linked with the e-way bills. Now, because of that also, I find there are so many issues. The class of buyers has not been not done the any e-invoicing to avoid to such occurrence of the non-generation of the e-invoices. Now that is also linked with e-way bill. So if you are a class of person who is expected to prepare e-way bill for the B2B supply or B2 export supply or government supply, if you are not generating the any e-invoices, you will not be permitted to enter the e-way bill also blocked. You cannot do that also. There is a major that is going to come effective from 2024. Then accounts and records, by and large you will be knowing all people are meeting the electronic records. Here the section is 35 to 36, read with rule 56 and 56 to 58. So accounts records, the assessment of then based on all these documents. Since invoice is also a mandatory assessment document, your other documents are necessarily an assessment document. So you have to keep accounts and records for the purpose of inward supply, outward supply, export. Whatever the business transaction you are doing with reference to GST, these documents are definitely prepared and should be handed over to the officer concerned whenever they ask. So here we are also know where the list of documents are given, the production documents, inward documents, and the law permits you can maintain the documents in electronic mode also. Where I have to keep my documents. These documents has to be kept our principal place of business as well as additional place of business. If you are having additional place of business there. So many times we found audit found or investigation found the documents are not available in the principal place of business. If the documents are not available at the time of inspection at the principal place of business, you are liable to 25,000 rupees as a penalty. So definitely in your business premises, principal place of business and additional place of business, or where you are storing the document, where you are storing your goods, you are expected to keep the records and keep the records to be produced by the officer as and when called for. And the period of preservation is shall be 72 months from the due date for the furnishing annual return. So definitely we asked for the trade asked for the extension of annual return. Now the each and every extension made you to keep the records for more than 7.5 years. So you can know very well, if you are going for a litigation, definitely you have to keep the records further till the litigation is over. So here the proper preservation of records is very much required. So you have to understand where I have to keep and how many years I have to keep the records. Input tax credit, definitely I am not definitely, it is a very lengthy subject, but I have touched very little. I do not want to go for a very elaborate discussion. Each and every sections of 16 to 21 or rules 36 to 45. And Vimal sir also told there are so many sections you have to indicate or so many section rules you have to mention. But however, sufficient I am showing the overuse only. I am not going for the in-depth. So the availment, the important requirement is possession of tax invoice or any other document. The second condition compliance is I should receive the goods or services or both. Then my recipient, my supplier should have been filed the return, which means it should reflect in 2A or 2B. And fourth and last is my supplier should have filed the return. That is 3B. If these conditions are, this is the primary conditions, there are some other conditions also required. So if these are the prime conditions are met, you are entitled to avoid the credit on receipt of your goods or subsequently you can take. But there are other conditions which I will go there also. Then this is a section 16.1, seamless credit, condition to avail credit, additional conditions for the capital goods. And section 16.4 says condition for validity of the documents to avail it. This is the bane of contention for many people. 16.4, the Patna High Court has given a verdict. Now all these verdicts are now gone to the, that is our Supreme Apex Court, and recently our distinguished speaker, Mr. Bimal, also told the 16.4 is playing a havoc. He said, if I am not filing and I am not availing ITC credit before the due dates, I am, even though I am paying interest and the penalty, I am not able to get my rightful credit. So we have to wait for the final words from the Apex Court. Till that time, it is now 16.4 is definitely, if you are filing dilated GST or 3B in any particular after September or after November, your availment of ITC credit will be definitely questionable. Don't postpone your availment unnecessarily to come into the clutches of 16.4. And there are some other these things. Then now we are having this 2A, 2B verification, mismatch between 3B and 2A. And rule 37, which says that is if your buyer has not filed 37 section, if you are not buyer, now the department, that is GST enforcement, periodically sending every month after filing the due date. These are the person has not filed the GST or 3B. Please reverse the credit or take the reclaim afterwards. So here all these conditions 2A, these things are the latest implementation to avoid unnecessary revenue leakage on account of surplus availment of ITC credit. Rule 36, this is nothing but your restriction. Could be restricted only if the available particulars are specified and contained in the document and it is not uploaded, which means GST or 2A or 2B, you are not entitled to take credit. That is a very much. So rule 36 for amendment, October 2029, they have given a 20%. Then afterwards they were done as 10%. Then 2019 it was 10%. Then January 2021 it was 5%. Now from January 2022 onwards, if the person has not filed GSTR1 within the due date, please take note, you are not entitled to take any credit at all, even though he can file subsequently. You can take the credit only for the subsequent month, but definitely you cannot take the month in which you received the goods, you received the document, but unfortunately your buyer has not uploaded the information. Here you have to understand all your financial requirements are totally hampered just because the other person has not filed. So here the tax compliance mechanism is very much vital. Tax compliance rating is also going to be implemented shortly. There you can find the vendor should be in line with your organization requirement as well as the requirement for the GST. If they are not filing the return in spite of sending the goods and giving the invoices, your benefit on account of these invoices will be totally nullified. After 1/1/2022, I find many times some of the clients are unable to get the rightful refund claim. Well, forget about these things. You can say you can pay, I can pay. After subsequent time, I can get the credit. There is no botheration. But if you consider if it is an export, I am doing the export for this month. Next month only my credit comes. What is my refund period? Only this month I can take. If the input is not coming in that particular month, definitely I am heavily losing my refund on account of the non-furnishing of your GSTR 2A or 2B. So rule 64 compliance, GSTR 1, GSTR 2A, GSTR 3B. So this is very mandatory. Along with that, you have to also ensure there is a e-invoice and e-way bill is required. Then based on the GSTR is available. Based on that, you will have a 2B. Based on that, 3B is available. Then imposition of on that we already check up. Then another important rules section is section 17. In section 17, we can go to the top bottom 17 on to 17.5. 17 on to up to 17.4, it says about the some of the rules. 17.1 says about the common credit. So if you are having a common credit which is required for the business and non-business, or it is exempted and taxable supply, you are liable to reverse proportionate credit as per the provisions of Rule 42-43. Then you are blocked credit. ID's reversal on the input is these things you have to, when it is a 42 and 43, every month you are expected to reverse the tax liability. Otherwise, there is every possibilities of incurring heavy interest. So here IT is available, business, taxable supply, zero rated supply. Not available other than business, non-taxable supply, exempted supply, nil rated and non-GST. So total credit consisting of exclusively uncommon credit. So you have to determine each and every factor and find out what is the common credit and reduce the common credit before availing it. The common credit, we have to again use this parameters, 3 type of parameters has to be used. And in the case of reversal of the capital goods, we are having a 60 months as a lifetime for the availing the credit. So we have to find out what is the 60 months from the date of purchase and availment. Then you have to proportionately debit that amount in your. And we are having a specific provisions for the construction industries also. There it is based on the floor area, that is saleable area, exempted area, or there are as the case may be available. That is entirely different. I am not going for the formula. Now the major issue is reporting the reversal. Earlier we just imported that we taking the net credit. We can report the credit available. Now after some time here, July 2022 onwards, the format has been modified. The reporting of this we have to done. Take all the input credit which is available in your 2B into your GSTR 3B table number 4. Then after that, what you have to say is reversal required as per the provisions of section 17.5 blocked credit, which you are then section 42 rule 42-43. That is your permanently you do not require this credit, you have to declare. Then you have to declare these are the goods which are in transit or where I have not paid the proceeds for 164 days, or where my buyer though filed GST or not filed 3B. So these 3s are becoming a very, very cumbersome procedure. Not a cumbersome, it is a more requirement for the compliances. So here, if you are not mentioning about the reclaimable credit reporting, now earlier reclaiming opening balance was up to 31st December. Now it is extended up to 31st of January. So please verify your reclaimable credit. That means in transit credits which are eligible for you, but you are not available at least from 1/4/2023 till this month. You can find out what is the quantum, and if earlier you are not available that credit, you can report this as a opening balance for the January. Otherwise, what will happen is the system will verify the opening balance declared and how much it is utilized for the reclaimed from the opening balance. That's why the reporting of reclaimable input is a very much required. Strategies for the correct GST claim: ensure accurate ITC, proper documentation, reconciliation with supplier data, timely return filing, periodical review, employees' education about the availment. If your employees are not properly educated, then every chance you may be losing your unnecessary credit. Then returns. There are also, we are only touch upon the very few returns. We are not going for any of these things. Other compliances. The return compliance is big because very much required. Your return is the basic documents given to the department about your tax compliance and your self-assessment. So return out of the pipeline, GSTR 1, Rule 59, summary of return, GSTR 3B, Rule 61.5, returns for specific type of persons also there, input service distributor, composition scheme dealer, and TDS. Each and everybody, the return compliance has been made mandatory, and the periodicity also made mandatory within such period, 1 month, or dates has also specified, and dates for different states also specified with reference to GSTR 1. Then final return. Many people are surrendering their RC for the reason for the closure of business. Unfortunately, they are not filing GSTR 10. The GSTR 10 is a final return which indicates I closed my business. This is my closing stock, or I am not having any stock. This is my future communication. The failure to file this GSTR return also, what happens? You may be losing, or you are also, what happens is you will be having unnecessary penalty on account of GST. Then annual return. This is very much required to correct the errors committed in anywhere during your GSTR 1 or GSTR 3B. Then you can also reconcile or report that in the GSTR 9 and make payments by reconciling this information GSTR 9C. GSTR 9, there is no provision to indicate whether you are liable or you take an excess claim. And also you cannot take any credit also, that is immaterial, this is not possible. But by declaring this information GSTR 9, and also you can give a very specific information in GSTR 9C, because there are umpteen numbers of provisions available to indicate what error you committed in your GSTR 1 and 3B, how you rectified this information in GSTR 9, and how the rectification resulted in the payment which I paid in your GSTR 9C. So my request for this is GSTR 9 and 9C, even though it is not mandatory, you can use it for the better compliance and better understanding of the legal provisions, and also you can avoid unnecessary litigation which you may not expect at the future dates. Then now they have given, now there are so many fine tuning has happened. If there is a difference between your GSTR and GSTR 3B, automatically there will be a notice will come. They have to explain why the reason. That is a thought told about the your rule number 59.6 he told. And also he told there is a requirement of the 88D, the manner of dealing different. If you are availing the credit more than what is entitled in GSTR 2B, immediately you will given a GS 0C, and you have to explain why this error has happened, why you are early. Otherwise, there will be a penal consequence follows. So these are the latest amendments to fine tune unnecessary non-payment of dues on account of GSTR 1 and excess availment of ITC, and also coupled with you will be prohibited from filing your GSTR 1 and 3B subsequent to the previous month. If the previous month is not correct, if previous month is not paid properly, previous month you have done an error which cannot be rectifiable, or there is a no offered explanation is offered, your subsequent returns will be not possible. Thereby you are landing upon yourself for the penal action, and also making your supplier also miserable by denying the rightful credit. So this is very much important. So difference in 2A, 2B, intimation sent, reply within 7 days. If explanation is accepted, it is closed. Otherwise, action will be taken under section 73, 74. Then another important fact is the utilization of input credit. So which credit can be used where? ITC can be used, IGST can be used for CGST and SGST, and CGST can be used for CGST and IGST, and CGST, SGST can be used for IGST and SGST. But definitely CGST cannot be used for SGST and SGST cannot be used for the CGST. But what I find, the system automatically debits the entry whenever it is available in electronic credit ledger. If you are not properly handled these debits by manual intervention, after some time you find there will be zero balance in GST, and you will be having a huge balance in SGST, and thereby unnecessarily you are going to land up for the payment of your GST tax liabilities. So before making debit entries as per the system thrown calculation, try to check up whether the system thrown calculation is correct, or I can intervene and manually modify the input credit on account of that. Then another important issue as per this utilization of credit is, if you are using 50 lakhs and above your turnover and you are not having any export, or you are not having a paid any tax on account of more than 1 lakh, you are definitely pay 1% tax in cash. You cannot use your ITC 100%. So payment point to ponder is nothing but calculate the accurate tax liability, timely payment to avoid the interest, right payment method. I told, if it is a correct, you have to pay CGST, or sometimes you misunderstood the place of provisions and you pay CGST instead of IGST, and finally when audit finds, you will find miserable, because once again you have to make the payment. After making payment only you can claim for the refund, and you find very difficult. So there you have to understand whether you are liable to pay CGST, SGST or IGST properly. Points to ponder for the return filing. Familiarize yourself with the return requirement. See, the return forms are clearly gives what is to be done, which is to be filled. That is very much required. Second, GSTN and our department also gives what is the requirement, how you have to fill a data in the return. So please understand the requirements, read the carefully instructions issued for the return filing. Then submit the return before the due date. Don't wait for the last date and come with some technical reasons, or you may not be available, power may not be available, all these things. Avoid unnecessary complication. Completeness accuracy. Verify the completeness accuracy within the parameters, within the return, one return to another. Reconciliation of the correctness. Please reconcile before submitting, reconcile, then you submit. Maintain records. This will make you to avoid unnecessary litigation in the later stage. Export and import. Import I am not covering, only export I am covering. So export on payment, absolutely no problem at all. If you are making without payment of duty, the first step for compliance is nothing but your filing of LUT. LUT has to be filed every financial year, and also if you are not penalized for any prosecution under Customs Act. So that is very much required. So many people find LUT is not required for services and not bother to file LUT before commencement of the movement for the export. Please understand, LUT is very much required. Please file your LUT on or before 31st March for the financial year, so that you will have an unhindered benefit of removing the goods at any point of time after the financial year. So LUT is a mandatory for export without payment of tax, either goods or services. Then deemed export. Please understand, deemed export. Only the goods manufactured in India is possible for the deemed export. You can purchase some, there are imported goods are imported by the dealer and they are supplying as a deemed export. Please note that is not possible. It is very clear, if such goods are manufactured in India, then the amount is paid in convertible current exchanges, not currency, convertible exchanges. So it is very much required. So these are the supplies which can say supply to registered person, advance authorization, capital goods, EPGC scheme, and also for the export oriented. You can supply and you can get the benefit, provided it should be a goods manufactured in India and you receive the proceeds in foreign exchange. Another benefit is given for the merchant exporters. You can send 0.1% or 0.05, 0.05 for interest rate. That the conditions is merchants should be registered with the Export Promotion Council. Many times you find he is not doing so. Then goods must be exported within 90 days from the date of clearances. Second. Third is the merchant expert should please know, understand, your person who is purchasing goods from you and exporting should indicate your GSTN number and your invoice number in part C of the bill of shipping bill. If it is not mentioned, every chance later date, you will be unnecessarily penalized for supplying the goods, which you may not be correct. Even though goods may be exported, but there may not be any linking between your goods and the goods exported. There you will find very difficult to substantiate your claim before the tax authorities. So also ask the person to provide a shipping bill copy by properly hiding the buyer details. If they want to do not disclose all these things, they can block it. Still, they can hand it over the document to prove that the goods are exported and your details are furnished in the particular document. Then finally, consequence of the non-filing, non-compliance. So definitely section 47, then we are 122, 138 and read with 162 rule. So what are the consequences possible? Fine and penalty, late fees and interest, then confiscation, arrest and imprisonment, and unwanted litigation. These are the consequences of the non-compliance of the legal provisions, which is required under GST. Late fee section 47, interest under section 50 and rule 37, and there may be a possibility your RC may be cancelled for the circumstances as not furnished return, then not furnished return by the composition dealer, take a voluntary decision but not commence the business even after 6 months from date of registration, and registration has been obtained by way of willful misstatement or these things, or any violation on account of the legal provisions of GST. So these are the possibilities of the cancellation if you are not properly adhering to the provisions of GST system. Then penalty. So the section 122 categorize each and every penalty for each and every offence committed or each and every non-compliances. It also categorizes for the registered person and unregistered person and also co-offenders. All the three categories, they were categorically mentioned what is a fine, penalty for each and every violations of the provisions of law. The provisions make also the lower, it is a higher 10,000 rupees, but at times it may be equal to the tax evaded, which is nothing but 200%, 100% of the tax. So this is the penal consequence on account of the non-compliance. Then litigation. So if you are not properly assessing, not complying with the provisions, which means which on account of the assessment related or non-submission related, then action can be initiated under section 73 or 74 or 75. 73, non-suppression of cases. 74, where there is a suppression. 75, where you collected the tax but you are not paid the tax at all. So there it is also possible litigations. Arrest. So there is a provision for under 132, there may be arrest also possible if the evasion is more than 5 crores. So there is a reasons also. Taxable person supplies goods without any invoices, false declarations, any invoice without supply or goods in violation of provisions, collects but does not pay the taxes within for 3 months. Even if collects the contravenes of provisions, then already convicted. All these things are land up you for your arrest and imprisonment. Then finally, the department is yet to implement. The department also want to recognize the tax compliance. So there is a provisions under section 149, which says compliance with reference to rating. So this compliance rating is once implemented, this will make easier for the supplier and buyer to identify the honest suppliers. That is very much important. Timely payment of taxes, adherence to various time limits, and the cooperation in dealing with the department. These will be the parameters which will decide your rating with reference to GST compliances, and hope this will be shortly implemented, which is beneficial for both. Already the customs has implemented AEO. You will be knowing about authorized economic operators. On the same lines, this section 149 also most welcome, but still it has to be implemented for the reasons best known that I hope it will be shortly implemented. So ensuring tax compliances, make list of all legal provisions which is required for your business provision or your organization. Then list out what is in forms and returns that you please know. Every legal provision applicable, mark the due dates for the payments of tax and filing of the return. Make all the documents required necessary for each type of transactions and the return. Keep your books in the pencil place with the ID and supporting documents in order. Keep an eye on changes. So each and every time there is a amendments comes, then please attend to the sessions conducted by DTPS, which they are conducting regularly across the country. They are having a 4 zonal units. That we are having a Chennai, we are having the Bangalore, we are having Delhi, and we are having the Kolkata. Each and every zonal unit is meticulously conducting webinars with the top speakers and those who are expert in the taxation, the taxation law. Mind these webinars are free for you. So encourage your employees to attend these seminars without fine. Ask your employees to visit the CBIC website to update their knowledge on GST provisions. So very much this is required. And benefit of rates is nothing but definitely you are considered as a honest taxpayer, and that will fetch you more and more customers so that your business will also grow. Then before parting, you have sufficient details about GST. I have given only the enabler. I have not given you to each and every provision. So the session's objective is to enable you to understand what is required as per the law within the parameters is the barest minimum. Always sure system is updated and that your minimal and no penal actions with the department. Now, to enable you to understand and educate you, the CBIC also started the web chat, that is your WhatsApp channel. Please immediately subscribe and follow so that you will be always updated with the latest provisions of law. So thank you very much for giving an opportunity to very minimum level. I have explained the legal requirements. Unlike other legal experts, you can say each and every section, subsection. Here it is only a education or enabling to understand the legal. Thank you very much. I will be handing it out session to the moderator for the any questions. Give me 5 minutes time. I will just take some cup of water and I'll come back. Thank you very much once again to the DGTPS for giving me an opportunity to interact with the large sections of our taxpayers and the distinguished speakers of the tax experts in the respective associations and higher level officials of the department. Thank you very much, sir, once again.
Thank you, Sri Venkateswaran, for such an exhaustive and lucid presentation. And I am sure all of us have benefited by it. Now, I would invite participants for questions, if any.
Give me 2 minutes. Give me 2 minutes time, sir. I will come within 2 minutes. Please.
Okay.
I'll take some water.
Good evening, sir. Good evening, sir.
Sorry, sir. Sorry.
Now I would invite participants for questions, if any. Please ensure that the questions asked should be relevant to this topic, and further the questions can be asked using the chat box.
Good evening, sir.
Yes, sir.
This is Vijay Kumar Subramanian from Tamil Nadu, Pinnacle, sir. So
Yes,
it's an
sir, please.
excellent deliberation, sir. What's an in-depth insight of the sections and other things, sir. Thank you so much of giving this much of deliberation on this topic, sir. And entirely, he has rolled all the GST within 1.5 hours, sir. We enjoyed the session. Thank you so much of giving this opportunity to participate in this wonderful program, sir. Thank you so much, sir.
Thank you very much, sir. Thank you very much. Sorry. Why e-way bill portal allowing supply and transporter simultaneously issue e-way bill for the same invoice number? As the supplier has already issued e-way bill and transporter again issued a e-way bill for the same invoice by mistake, then supplier is getting notice to fine of the tax amount with intent. I'll take this question. I find these questions are recently the department has issued so-called that is notices or calling for explanation. So here the issue is not, it is a duplication of e-way bill generated based on the same invoice by the supplier. So during the implementation from 1/4/2018, so somewhere during October 2018, there was no validation was created in the, unfortunately, one validation is not created in the e-way bill portal. And e-way bill portal also admitted that during that period, the validation is not properly done. So for same invoices, multiple e-way bills has been generated. Now, after 2018 October, no such multiple is possible until otherwise the supplier is middle with, say, if it is a 288, you can make it a 288A. The system will not understand both are, it will understand it's a both are different. That is the only thing happening in the e-way bill invoices. Otherwise, by and large, there are very strict validations are happening in the e-way bill portal, and it ensures that no duplicate e-way bill is generated for the same invoices. That we can definitely say about the e-way bill portal. As per my experience, I'm doing it for the past 5 years on e-way bill periodically verifying. Now they have given also two-factor authentication also. Without two-factor authentication, it is not possible for any person to generate a e-way bill to ensure unnecessary creation of the e-way bill by unscrupulous elements. Now two-factor authentication also introduced, and now the two-factor authentication is made mandatory. Then another question you can take, can anybody please tell that e-invoicing is applicable on self-invoicing enter? Absolutely no, sir. The e-invoicing is only for the outward supply. In the case of RCM, you are getting inward supply. So there is no necessary, but assuming your buyer, your supplier is already a class of person who is under the category of B2B, that is e-invoicing person, he may be uploading the e-invoicing in the portal and he may be referring yourself as a RCM required person. That is possible. There are now possibilities. There are big corporates or there are some of the biggest organizations, though they are having, for example, security services. They may be having a come to the 5 crore and above. Still, there may be a proprietary concern or it is a partnership concern, but you are liable to, as a registered person, you are liable to pay. In that scenario, for them, there is a requirement for the e-invoicing, they will be making that. Otherwise, you may not be required any e-invoicing for the RCM. Sir, any option if e-way bill is expired in transit. So e-way bill portal says e-way bill can be amended within 8 hours. So here, that's why I told many times our transporters may not be having adequate education or they are overlooking the requirements of the legal provisions. The transport logistic are also now expected to understand the e-way bill provisions, and there at times they are not doing. Sometimes it happens a bus is there is a breakdown. They should immediately intimate to the buyer or the seller regarding this e-way bill. What happened, breakdown happened, then they can advise them to increase, that is extend the validity. Now we are having empty numbers, but unfortunately that is not properly done. So what happens many times, the e-way bills are getting expired beyond repair by the e-way bill portal. The e-way bill portal does not permit, because the e-way bill portal calculates the distance based on the 100 kilometers. At times it is possible to do many number of transports. So to not avoid all this unnecessary complication, they are given a minimum of 8 hours for the modification in the e-way bill portal. Case TP discharge or liability after TDS, then interest. If work contract has provided the government paid the amount later. In that case, TP has discharged their liability after TDS, then interest will be liable. Sir, here this you know very well about the provision, that is when you have to issue invoices with reference to provision of services or contract services. So in the case of government contractors, you are very well aware, your bills are approved by this. Then once your bill is approved based on the M book, you generate the invoice and submit for this governmental agency for making the payments. And they will be paying, the TDS will be subsequently done, but it does not say your liability for the payment does not make them to liable TDS immediately. Your agreement with the department will be different, so that the department cannot expect that they have to pay this is immediately. That there are requirements as per the requirements for the particular government department for sanctioning the amounts. But your liability accrues once you complete that, once you submit your invoices which you uploaded in your portal. So then there is a question. E-invoice registration can be done voluntarily. E-invoice cannot be done voluntarily. The system will indicate whether you are a class of person who is requiring e-invoices. That is very much required. So the system will only allow you. It does not make you to go for a voluntary e-invoices. So e-invoice portal will recognize which are the assessees having a adjusted turnover as per the GSTR on file. Then it will be indicate you. Then if you declare that my turnover is more than 5 crores, the system will permit you to register. But by and large, the system at the back end also verifies. But if you say that my turnover is more than 5 crores, then you have to give a declaration. This may be a wrong declaration, means then you are penalized. Please take care of that. So if you give a declaration, my turnover is more than 5 crores, my turnover given in the GSTR is not reflecting what my actual turnover. I wanted to go for e-invoice, you go submitting the declaration. Then what is the section 2B showing ITC liability, but later ITC is cancelled retrospectively. And see here, you know very well that there are with reference GSTR 2A, GSTR 2B, and also your GSTR 8 table. There are different timelines are available for them to consolidate this submission of the GSTR 2A. In the case of 2B, it is a static report, which means if you are not filing any GSTR 1 after the due date, it will not come into the month, it will be considered for the next month only. So their timeline or the validation is based on the date of filing for a particular tax period. In the case of 2A, it is a dynamic. So once you file, it will be coming as your GSTR 2A will be always reflected. In the case of table 8, it is a consolidation of your GSTR 2A file date from 1/4/2014 of previous financial year up to permitted date. That means we can say up to 30th September earlier. Now it is a 30th November till date, whatever the returns filed, you are entitled. So that's why it is coming in the 2A. So we are having a 3 different data for a same set of assessees, and this you have to analyze after downloading the information, and you can suitably reply to the either it is a ASMT notice or show cost notice after downloading all this information. Section minimum penalty is 10%. That's passing on fine. The office is saying that as per that minimum penalty is available, which is not justified, can be please whether lower penalty. So as far as adjudication officer is concerned, these penalties are already quantified in this section itself. He has no locus standi to reduce any penalty below that. If at all any requirement for the reducing this penalty, it can be possible at the appellate levels only. Or at the adjudication level, he has to adhere to the already prescribed minimum penalties as per the sections. That is the only possibility. Except in the case of section 125, which speaks the officer may impose a penalty up to 25,000 rupees. Since that liberty has been given only under section 125, in other section there was no liberty has been given to the officer to reduce the penalty which is contemplated in the particular sections. When you are saying 4D, table 4D ineligible for proceeding finance, it is currently here. I don't understand. Once again, sir. In the obligation to report on the table 4D ineligible ITC for the preceding finance in the current year. Preceding finance, there is no provision, sir. Actually, there is a table called the table number 10, 11, 12, 13. This is the tables available to report the availment of a particular finance year in the subsequent financial year. Absolutely, there is a no preceding financial report is not possible. It is only possible for the if I availed or I debited any amount, then you can report in GSTR table number 9, sorry, table GSTR 9, table number 10, 11, 12, whatever, whether you increase or decrease your tax liability or increase or decrease your ITC liability, and you can report the payment in table number 14 for the amount you declared as a payable in GSTR 9 or GSTR 10 table in that particular table. Then amount deposited in cash ledger for discharge tax liability and dealer forgot to file the DRC for debiting the amount from the cash ledger. The said amount not to, is there any relief to dealer from interest provision? Sir, until otherwise you debit the amount, it does not go to the exchequer. It is as good you are keeping the amount in your account, but unfortunately in the government account it is without interest. So the trade and industry has to ask if any interest is required. There is a policy decision. As of now, if the amount is available, I have not debited, means your liability has not been discharged, and as said by the officer, you are liable to make payment on account of the interest. There is no escaping provisions. So I think there is no more questions.
Yes, sir. So I think it.
Sir,
fantastic
one more question, sir.
for
Sir, please, sir. Sir,
Okay.
please, sir. Pardon me, sir. Pardon me, sir.
Or these notifications have 2 or 4 digits and for convenience record digit where they can get. Sir, this 6-digit HSN code is available in the customs portal, sir. You can go for customs portal tariff, you can download tariff, because you know very well aware as per the provisions of section 2 of GST Act, the tariff HSN is embraced from our customs tariff act. That is very clearly mentioned. So if you want to know for the 6-digit number or 8-digit number, you can go download. The PDF file is available every month. They are uploading in the customs portal. You can download the tariff from 1 to 90, 1998, that is project export. All these things are available. You can upload. It is definitely for a learner. If you want to understand the HSN code and elaborate these things available, you can use that, sir. That is all about this HSN code number. Yes, CBIC, go to the customs portal, download tariff act. You find the updated version as on 1/4/2000. I find it is even after 1/9 there was a availability, definitely available, sir. No doubt. How we will link 4 digits? I don't understand what is this question, sir. How we link 4 digits? See, you have to read the customs tariff. The customs tariff structure is chapter heading number, then subheading number, sub-heading number. So you find your product name, search for that product. If there is a specific entry, then you can select that particular entry. If there is no specific entry, you can go to the residual entry. It is normally begins with 99, 90 or 99. So 119 possible, 99 is possible, 90 is possible. If you find others, you can fit into that category. If you are not finding a specific heading for your name, nomenclature. For example, mixie, you may not find any mixie grinder, but you can find electromechanical appliances available in the chapter 85. That's a particular chapter is available. There you can find all electromechanical appliances for self-propelled motor. They have given a this thing. There you have to fit into that. If you still want to know, then you have to get the explanatory notes for the HSN. Then here one person asked how to disclose ITC opening balance. The ITC opening balance, if you mean it is a reclaimable credit, which means the credit you are not availed withheld for the reasons of the non-receipt of the goods, even though you received the invoices, or there is a necessity for you to reverse the credit, but you are going to reclaim after the payment, then all these things can be done as opening balance till 31/1/2024. Earlier it was 31/12/2024. Now it is extended up to 31/1/2024. You can claim up to that. There will be possibilities. You can go to the web portal, go to the ledger called the reporting of the opening balance of the reclaimable. There you can enter the data. Then you can use the ITC. ITC reflecting is credit ledger is not being able to claim while filing refund claim export under LUT. Sir, please understand as per the provisions of section rule 89(4), different calculations are required. The ITC you are getting in your ledger, electronic credit ledger, is on account of services, goods, and the capital goods. Unfortunately or fortunately, you can get refund only on account of input and input services in the case of LUT. In the case of inverted tax structure, you can get claim of only ITC only on account of input. There, definitely you have to modify. It is editable field in the refund claim for RFD 01 for the entering the net ITC. So the net ITC is different. What is reflected in your GSTR 3B is different. You should take carefulness for the claiming the correct ITC and correct refund claim. Otherwise, there is a request for the demand for the erroneous refund also. Sir, I do not know which CBIC website you are saying. I am saying CBIC, go to the customs and custom tariff you can find. I think recently I found it was also updated very recently also.
So I think it was a fantastic experience for all of us. In such a short time, we have been enriched with all the information on various compliances under GST Act. And credit goes to all the presenters as well as participants without whom this webinar would not have been such a success. Finally, I would request Sri Vivek sir, our ADC DGTS, for giving vote of.
On behalf of DGTS, DZU and KZU, I take this opportunity to propose vote of thanks to those who have directly and indirectly contributed to this webinar on overview of GST compliance under various sections organized by our department. First of all, a sincere thanks to Sri Amish Kumar Gupta sir for your time and input. Sir, your encouraging words are always a motivator for all of us. We are really enlightened with your knowledge and presence. Also, a thanks to Sri Bimal Jain for sharing his valuable experience, and special thanks to Sri Venkateswaran for his presentation and speech that made us understand the topic so lucidly and in such an easy manner that we all can appreciate. In the end, I would like to thank all the participants for their support and time in making this webinar a success. Thank you so much.
Thank you, sir. Thank you.
Thank you, sir. Thank you. Bye for the day.